we're kind of at the beginning of a long, wrestling with this issue, and solutions. We'll get to it, but we have the ability here to kind of really focus on and understand the problem before discussions and another panel on solutions continue yet tonight and tomorrow. So I do need everybody to say hello for the podcast, though. So I'm going to say, Stu, thanks for joining us.
Oh, my pleasure. Thank you very much.
Tony, glad to have you
Happy
back.
to be here. Thank you.
Aneliya?
Happy to be here as well. I should immediately start with a quick disclaimer. I represented Trian in their contest at Procter & Gamble 2017, advised Unilever in their defense from Trian. I also work with Engine Number One and advised Train and Carrier on ESG. So that's a disclaimer, plus you can ask questions, invitation.
I love it. Great to have your expertise here.
We do. This is a fascinating book you've written.
Yeah. And Andy, glad to have you.
Great to be here.
Okay. So I want to start just by asking each of you, just to kind of level set here, how big of a problem is short-termism? We'll get to the buzzword, but just in your mind, how big of a problem is short-termism? Huge problem, medium problem, low priority, non-issue. And we'll just go down the line here. Stu?
You can probably conclude.
Yeah.
I think it's a really serious problem.
Yeah. Tony?
I'm going to surprise you here, but after hearing Stu's presentation, I think it's a huge problem because I think it's a behavioral issue, not a systemic issue. And when I see these kinds of systemic ideas of changing capitalism, it scares me.
Okay.
Also think it's a big problem.
Andy?
I think it's a big problem because it's a red herring and it moves us in the wrong direction.
Okay. So we acknowledge that it's a buzzword. I want to understand what you think it is. And maybe you have a research definition for it. Maybe it's something else, but just in your mind, briefly, what is short-termism? And Andy, I'll go down the line this way this time.
Oh,
Yeah.
thanks a lot. Well, I'm not sure what it is. And now I have to say I'm not an expert on short-termism. I've worked in business and society for 35 years or more. So I don't really understand what it is. It doesn't seem like it's a belief system like communism. I don't imagine like people demonstrating in the streets with the little red quick dinner cookbook, for short-term dinner, this sort of demonstrating, pushing that idea. So it's not like a thought. It doesn't seem like it's alcoholism. Like it's like a ongoing set of habits that can't be broken. It seems to me like it's the symptom of the incentive structures. And if you change those incentive structures, it will change. So to me, focusing on it misdirects us because we start thinking we can attack it by teaching students to not do it or taking managers to the 12-step program so that they won't, have that. When it's a bigger problem, it's just the symptom of it.
That's really interesting. Aneliya?
I also don't have a conclusive answer, but I'll add a perspective here in that we tend to equate, I think, wrongly short-termism with activists, long-termism with stakeholder supremacy. I don't think that's quite right. I think that especially today in the markets, a lot of investors are changing their time horizons. And Trian, for example, would claim they're not an activist. The first thing that Engine Number One said to me was the same. They would argue that they have very long time horizons. I think the problem with short-termism, as I see it, is when the decision-making of corporate leaders is driven by pressure to report on a quarterly basis to demonstrate some results.
Okay.
Yeah, I agree with a lot of what you said. To me, I would define it as a pattern of behavior that is trying to meet the short time period of results, et cetera. And I do think it's a pattern behavior. I think it's a management, it's malpractice of capitalism to me, right? It's not endemic to capitalism. It's misunderstanding what your job is, which is not quarterly. I mean, by the way, there's a lot of evidence, and you use some of these. I think there's a lot of evidence that the stock market is totally long-term focused. And I'll give you, I have a couple more examples when we get into it. I think you put some up on the board. I think those are examples where the actual performance of a stock is very much based on long-term decision-making. But managers get sucked in, and we'll talk about causes, but they get sucked into trying to meet this short-term requirement. And I think business schools and all of us need to highlight those successes of long-term. And business schools need to teach what is the job out there. Right. So I think there's a lot to talk about on this.
I have to ask, you were a CEO. Did you feel it? Or are you guilty
Every day
of it?
So thank you. I mean, I don't want to hog time, but so I've been the public face to public companies. By the way, I should say, I think this is much more of a public company problem. When you get into family-owned businesses, I don't think you see this problem at all. So, and I've been that public person for a long time. I had the last company I was 20 years CEO of, and we had sustainability in a slightly different term, but in our mission from the beginning, which was building sustainable competitive advantages. So we, from the beginning, acknowledged that it was about long-term, and it was customer-focused, just as you described. And by the way, my business is really boring. It's 3% growth packaging. We make food cans, plastic bottles, caps, and closures, and we're in the top 10% performance of the S&P over my 20 years there in a really boring industry because we stayed right to a long-term focus of building a business. And so that is an example for you of that.
Interesting. Stu, what is the buzzword to you?
Well, as I indicated in my talk, I think the short-termism is embedded in this larger, and I like the idea, it is a belief system, right, in a lot of ways. Because a lot of it's between the ears, there's, as you say, there's nothing about capitalism itself that says this is the way it has to be committed. It's within our power to change it. We just have to change our mind, is really what it comes down to.
And you made a good example that, and historically, you can go back and you can see times when we were better at that.
Exactly. And but it ends up becoming embedded in institutions, and institutions have inertia, and those institutions end up constraining behavior in significant ways. And I think we've been living with that for 30, 40 years.
So if we don't have we don't have a written sort of dictionary definition of what it is here, but it sounds like you kind of know it when you see it. What have you seen? What examples of short-termism can you just point to as, this was regrettable, or this was, some people benefited, some people really suffered, and this should not have happened this way? From a CEO looking at a counterpart in another industry, or a professor studying it in a case study, or seeing it with clients. I'm just curious, if there's a picture in the dictionary, what's the picture?
I'll start with one ugly one. When I was still doing activism, was global head of activism and defense, so banker defending corporations. I worked with Toshiba in Japan, and those guys had 5 different activists, each one of which had a very different idea of what they should do right now, like short term. Definitely not a 3-5 year span, Stuart, that you were wondering if that's short term. Very different perspectives. And unfortunately, under pressure from the shareholders, the company had to go through 2 different rounds of breaking itself up, selling itself, and going for shareholder votes. I mean, that company was effectively broken because the leadership had to yield under the pressure of shareholders who couldn't even agree on what's needed in the short term. So to me, that is when this behavioral problem, you're under pressure and you can't think long term, becomes a real disaster.
Tony, you didn't have a board like that.
Well, I mean, the obvious ones, I mean, you look at, there's quarterly earnings. We all know that. We can see it every day. You have businesses that will do everything they can to make a quarterly earning, right? And then we'll get into analysts and what causes that. I'm not even going to go there. But there's also, there's a lot of pressure on businesses to, if you've got a portfolio of businesses, sell off an element of that portfolio. And as a manager, you say, wait, this is a really good business. Might be down this year, might be, but it's a great business. Another one is R&D spending. You can cut your R&D spend if you want to. And you can make your numbers for a year or 2, but we all know where that's going to lead a company. And you can see those decisions every day. And as I said earlier, you can see businesses that don't make that sacrifice. And I think in the long term, they win.
Case study? Any, Stu, do you have a favorite cautionary tale?
There's a wonderful book that some of you may be familiar with, written about GE. Some of you may know. The title is The Man Who Broke Capitalism. Now, it comes from a particular perspective, but I think it points to all of these things that are being discussed, right? That over a period of time, GE basically ran itself into the ground by behaving exactly this way.
And if I can add, we were just worked at UBS on the G Vernova spin, and you would be amazed the amount of time that went into G Vernova trying to rebrand themselves and say, we do not want to be the business that, like G, has these legacy issues. And they are specifically focused on attracting ESG and sustainability investors as a way to go all the way on the other end of the spectrum.
And it continues to reverberate, because there were lots of Jack Welch acolytes, right, who continue to inhabit companies, including Boeing, for example, right? Can we at least partially explain what's going on at Boeing to exactly this way of thinking and behaving?
Andy, I'm going to turn to you, but maybe you want to give an example of people complaining about short-termism that you think isn't.
Well, I'm going to go and I don't really believe it exists. I mean, I don't really even understand what it is. I guess it is.
I mean, you just heard some examples.
Yeah, I do. But what I hear is we take some stories and then we impose on them this idea that had they behaved differently, thought about the long term, they would have behaved differently. And I don't, that's not really science.
Yeah.
Those are stories. Maybe it's
that,
real.
We haven't said that yet, that they should be thinking about the long term. We'll get there, though. Okay, so let's ask about where this shows up. Is this really public markets only? I mean, Tony, you mentioned that. Private equity, Stu, that came up in your talk before, but
could be different.
They brag about the fact that they're long-term investors, but boy, they sure get nervous when they have to hold a company more than 5 or 7 years.
You see some signs of change, right? But I think it's still very niche.
Yeah.
I actually do think, and by the way, thank you for asking the question, will it break through, as you put it? I think that I am personally seeing the most revolutionary thought in this space in private equity.
Yep.
Now, is it scaled? Is it big?
Right.
No.
Yeah.
But if you every big private equity fund out there has some sort of impact, climate change. Apollo has KKR,
They
TPG,
do.
all of these guys.
BG has Climate Rising, right?
Exactly. Apollo Impact, Climate. They have so many different products. And that, by the way, is true for the asset managers as well. So within BlackRock, you can also get these various products. And I find that they are most innovative because they are trying to marry, we were talking about this earlier in the room, they're trying to marry social impact and financial returns. And they're creating the most interesting models. I haven't seen any of it be massively compelling that can happen. I think it depends in some ways on the public markets. But I think that they are getting closest to breaking through.
Yeah. And I think coming back to your point about privately held firms, I think that's the real leverage point, right? That we've actually started, there's a business leader, a guy named Fred Keller. There'd be no reason why anyone would have ever heard of him, because he was the founder and CEO of a privately held family company in Western Michigan called Cascade Engineering. It's not trivial. It's $500 million in revenue. One of the early B Corps, but he's ready to be done with B Corp at this point, but he's one of probably the only manufacturing B Corps. But Fred and I have kind of started this initiative that we're calling Bringing the World Inside. How do we reimagine the whole idea of externalities and bring the world inside so that there's no such thing as externalities anymore? And our leverage point for that is the world's forward-looking, privately held business leaders, right? And just a statistic in the U.S., of those companies in the U.S. that earn $100 million more in revenue, 90% of them are privately held. And they create 80% of the jobs. They're the guts of the economy.
But they're only 2/3 of commerce and transactions. Dollars.
Fair enough. Fair enough, but they create the most jobs, and they're the most numerous, right? And that's by definition they're mid-tier. They're not huge. They're mid-tier, and they don't have much voice. So our initiative is designed to try to build a community of those leaders, because our theory is there's lots of Fred Kellers out there and they don't know each other, and if we can band that group together, that could make a difference, because, as you say, Fred has run his company exactly the way we're describing for 40 years, and it's been enormously successful. And so if we can somehow pull those voices together, create a collective voice, that could make a difference.
So before we move on, family businesses sounds like it's not a big problem there. Public sector, bigger problem. Private equity, maybe somewhere in the middle. Anything else we're missing here?
No, I think a form of entity not. We've sort of gone by a point that Stuart made, which is a really good one, which is shareholders are not all the same. And so I don't know if we want to go there yet, but I think that's a whole nother part of this topic is when we talk about, because obviously I'm shareholder driven and primacy is no problem with that.
Right.
But I look to a long-term shareholder. Right, and as I told Stuart coming in, I told people that. So if I had a short-term shareholder, an activist, I'd say, look, I'm not managing for that. I'm managing for the long term of this business. That's the shareholder I'm focused on. And Stuart asked me a question, well, what if they don't like that? The answer is they fire the CEO. I mean, that's the way the world works. At some point in life, you got to have the fortitude to believe what you believe and stand for it. And for me, it's easy in that regard.
Could I add to this? I couldn't agree more. And we all wanted to have provocative conversation. We're agreeing too much. But our team, UBS in particular, the full institution, is spending wild amounts of time trying to understand how different investors are integrating concepts of ESG and sustainability into their investment decisions. Who's making that decision? Is it the PM? How is it in the investment committee at every point? What does short and long term mean? Where exactly does it sit within the shop? All of that, and there couldn't be a bigger difference between the various range. One of the problems is that most of them are in fact private, and so we don't really know how they're making those decisions. And you have to literally go and ask each one individually. And in our day and age, with where we live today, there is a bigger polarization. So you have the extreme on one end and the extreme on the other end, everybody in between. And it is almost I think, impossible to have a market view. If you are a corporation, if you're a corporate CEO, what do you do to please investors, to attract the right high-quality investors and dissuade the short-termists? It is very, very, very hard.
You know, the trick is the only way you get to what you're talking about is you have to perform in the short term, right? It's like a catch-22. That, because I think about the experience at Train, right? I mean, what's enabled Train to take the kind of view they have about, kind of building long-term sustainability is the fact that they're delivering short-term results. And they've been able to attract a very different, kind of configuration of investor. Probably 25% of their investors are long-term investors, and we'll call them sustainable investors. And at some point, you get past the point where you're really in danger of getting raided by an activist.
Absolutely, and that, I mean, obviously this the activist is always a risk to this,
Yeah.
right? Because my whole point is you're being defiant in a way and saying this is who I'm focused on. But I think you raised a really good point that there are. Go on. Sorry.
Yeah. Well, I was just going to say there's that phrase, what's the business case for such and such a long-term play? It's almost like, what's the short-term case for that? You said you have to be, you have to manage for the short and long-term, or be successful in the short term to be successful in the long term as well. If we, I want to get back. So now we have a sense of what this is. We think it's a symptom, right, of a system or incentives. What is really driving this? Like what? And we understand that there are different time frames almost for different types of businesses, family businesses, private equity, public markets. The symptom shows up differently because the incentives, the systems are different. So let's get at like the causes of short-termism. And
Can I jump in one that we were talking about? So
Yeah.
start with
What are-
composition of shareholders. I mean, so I was in getting ready for this, I went back and looked at what was the hold period of shareholders back in time. I went back to the 50s just out of curiosity, and it was 8 years. The average hold time for a shareholder now is less than 6 months. So the first thing is what I said before, which is if you really are, you have a lot of shareholders who want you to make the quarter. And look at what happens to reaction to stock when you miss your quarter. By the way, I'm a big fan of not giving guidance. There are companies in my sector who give annual guidance and say, I'll give you that, but I'm not going to give you the quarterly thing. So I think that's, that's an element of it.
Although, to be clear, it is not the activists who hold stock for 6 months. This is more this sort of the high volume, high frequency trading that's driving these. Most of the activists do have multi-year thesis, and what's driving them, what's causing this, is usually having an alternative view of what the company should do, like a low-hanging fruit, if you will. Split up this division, do this, do that, and there could be a quick pop in the stock.
Yeah, exactly.
Right? This is, they just have to have an alternative plan. Sometimes it takes a year to realize it, but that's really what's driving the activists.
But typically those are pretty short-term.
Those are short-term
elements.
plays.
So you're right, and they do come in longer. But they're looking for a momentary action on the stock, a catalyst, and then they're going to sell on the.
And I feel that Andrew wants to say something, but I'm just going to clarify. He's like, I just said this doesn't exist. Will you stop asking what's causing it?
Yeah.
But I'm just going to say that activists, just like other investors, are very, very different. So when you have like a triad, they come with the idea that they're doing quote unquote operational activism. So they're going to go run the company. Now you can take that with a grain of salt, and you might think that maybe that's not really true, while others are more driven by M&A. But at the end of the day, it's about how long do they hold the money that clients have given them. And like asset managers and other investors, they're under timing pressure. Some of them can afford to have longer game than others.
Okay. Andy, you were shaking your head.
Well, I'm just, this conversation kind of perfectly reflects my fear. Like, I don't think short-termism is the issue. And particularly if my issue is I want the world to be more sustainable. That is, I want better welfare for a longer period of time, better distributed. I don't understand how this conversation relates to it. That's about things like, internalizing external costs, fixing market failures. That's about changing the rules of the game. And what we're having instead is a conversation, is kind of like soccer players sitting around saying, well, you can immediately shoot for the goal, or if you're really a long-term thinker, you could pass a few times, and really good players pass a few times, and so we're going to talk about that. But yeah, okay, great. But if you want to change the game, you got to change the rules of the game. Mm-hmm. And whether or not, and short-termism is exactly the kind of stuff we've done for years. We have these 2 or 3 word buzzwords that we throw out there that are going to save the planet, and if we only just follow those things and we believe in them for a few years, short-termism right here, and then it falls and it's gone, and we waste 35 years from when I started. And if I want to point to short-termism out there, yes, I'm on my hobby horse, I'm continuing, is this. It's the NGOs, it's the academics, it's the business institutions who followed these fads rather than saying, no, our job is to bring about better regulation. Our job is to bring about better informed students, not just give them a nice class on sustainability, but really have them understand what the fundamentals are. And we've not done that because it's easy. We can have the new institute that is in this new area that's going to be very exciting, and we can go that direction rather than worrying about our fundamentals.
Mm-hmm.
But Andy, I actually completely agree with everything you just said. You're sort of singing from, that's exactly what I think needs to happen. We need to change the rules of the game.
Right. And if you go back, one of the most profound things I have come to learn over the last few years is that way back in the 1970s, people understood about climate change. And there was an idea that maybe what we needed was different kind of regulation. And there became very strong pressure that no, we're going to do it voluntarily. We had the Chamber of Commerce, we had Morris Strong, people, and they sort of said, we're going to do this through voluntary action, not regulatory action. And we've seen NGOs cave to that to say, oh yes, now we can leverage the private sector. We don't have to do these difficult things anymore. We've seen universities leverage that. No, we have to change the rules of the game. There's nothing wrong with capitalism. What's wrong with capitalism is we don't have good regulation.
Right. But government's been in retreat for the last 40 years. Maybe that's starting to change. And, we need leverage points, right, to bring that kind of pressure for change. And for the last 40 years, I agree with you, it hasn't been the large public corporations for all the reasons we've just described, right? It's resulted in incrementalism. And the NGOs have kind of gone along with that because they can get paid that way. So I'm with you on that one. And business schools have been part of that system too, right? It's a self-sealing system. And B Corps don't move the needle, right? They're mostly little tiny companies. They're cool, but they don't move the needle. So the question is, where's the leverage point? And again, I come back to the idea that maybe it's the mid-tier companies, if we can figure out how to organize them, they could have a voice that could actually have impact in places like Washington.
But also the public companies that do this well. I mean, I think, to use the analogy, I actually am a fan in the soccer of just hold the ball longer and then make the shot. And let's celebrate the teams that do it and show how good they are, because the system isn't broken and the rules don't need to be changed. That's where I come from. And I think the evidence, Train is a great example. Unilever, customers is a great example. There's a guy by the name of Warren Buffett, some of you may know. You know what his hold period is? Forever. So there are long-term shareholders, and it works. Businesses that focus on long-term, and I agree with you, short-termism, life is always a decision of how long am I going to wait for something. I mean, so the term doesn't mean much. The question is, are you making the quicker decision, or are you making the longer-term investment decision? And there are companies that do it, and I think they're the winners. So I think some of this is let's go out, let's evidence. Am I right on balance? Are they the winners? I think they are.
But then
And my concern is not who's winning or who's losing in today's game. And what I'm concerned about is, I believe that climate change is real. I believe that there's a small but very significant risk that it could be very bad. I believe that we have a problem with loss of biodiversity. We have a lot of externalities that are not being internalized. I don't really care who's winning or losing. And I agree that, that maybe it's kind of working. But for the things that we're worried about, short-termism is like, I don't even see how it's on the same page as to worrying about that.
One of the, just because I wanted to come back around to this, because we treat it like sustainability is different than this. And if you're sustainable, then you're good on this. But guess what? There's a lot of short-termism and sustainability too. There's a bunch of companies that are lying to you today about what they're doing.
So it does exist.
Hear you.
So short-termism it's a way of behaving. It's not about capitalism or anything else. So I just
Yeah, that's great.
Can I
Well,
also comment on this? Just
I'm really enjoying this.
We're,
so
we're
yeah, please.
throwing the whole all the cards in the wind. But so a lot of the time that we spend with our corporate clients is focused on, if I do this sustainable activity, if I focus on climate change or whatever else, will that attract more investors and cause my stock price to go up? And so they are asking us to really rationalize, to build the business case in the short term for them, that their valuation will improve because they have done something positive from a sustainability or ESG perspective. What we are facing up against in a world where shareholders care, which I think they do, and this validates Andrew's point, which is when investors under regulation have enough information, they have enough data, they're able to make informed decisions. So then you would have a better functioning market, presumably, because investors will have information about which company is sustainable, which one is not. Then they can put their money in the ones that are good. They'll invest in Train rather than Carrier. Train will trade very, very well as a result, and because they're doing something very sustainable, they will also deliver short-term results, and then you don't have all of this, do we go long-term, do we go short-term in terms of decisions? The problem is that the markets are not doing this very effectively today, in part because it's hard to attribute stock price to any one indicator alone. You can't tell, is it because the CEO is very good? Is it because the assets are very good? Is it because Train is serving, a client base that is in the energy space? You can't do it. And then a lot of this is also by definition long-term, so you don't necessarily see the benefits. So we're having a hard time pricing it as of yet. But as investors are evolving in their thinking, they themselves are making estimates. So like Bridgewater are taking all this data and creating their own estimates. And so today they can tell you in their own portfolio, where do they think this or that or whatever stock is going to trade. They are guessing, if you will, what that data is in the absence of regulation. So I think that it is getting there. There's some hope, but I wanted to throw that one in.
Yeah, that's really interesting. So regulation has come up. A few of you have mentioned it, right? The reporting standards. I mean, quarterly conference calls. That's a reporting requirement, right, for public companies. That is regulation that sort of like defines that time frame in a way.
Not in Europe.
Not in Europe, right? Stock buyback programs also. We heard about how the regulation changed. So, what are some of those? How are those? If this is a behavior that's a response to stimulus, right? What are the key factors in influencing this behavior that you see coming from regulations like those?
I'll venture with two.
Yeah.
One, I think, is disclosure, which is what I was talking about. And we do see a difference between, obviously, Europe has regulatory regime that requires disclosure. The United States opted for a different strategy with the IRA, which was more based on incentive. But disclosure is one piece where you can see regulation playing a role, because if you have disclosure, then you can inform investors and attract capital. The second bit is our current laws, if you will, and rules and regulations around what public companies can and cannot say in the markets. And so, as it relates to sustainability and climate change and a lot of these bigger issues, there is in D&I and in all of this, I think that as CEO, and Tony would know this best, has to be very careful what they say. And so usually, because you're claiming that this is material for your business, you're claiming that it has certain impact on financials, you can't change your mind later without investors penalizing you. You have to say it on a certain regular periodic basis. And that means that your storyline has to be very inflexible in some way. And when we do analysis to compare what we call the equity stories of companies like Train and Carrier, and we try to see who's effective in communicating to shareholders, it turns out that it actually matters quite a bit how much you're telling the shareholders. And I think that is where CEOs sometimes trip up and hold back because they don't want the litigation liability potential.
Interesting.
Fearful that maybe what they're saying isn't real.
Yes, that they have to backtrack at some point, and especially when you're talking about structural issues, like the ones that Andrew was referring to earlier. It's a scope 3 issue, as you're saying.
Yeah.
Like it's not solely within your control what is happening down your entire value chain and with a lot of the other players out there.
So I think, again, if you make the contrast, of a Train versus other players, that increasingly I think it comes to light. And if we see, Andy, I'm with you in the sense that this is a larger systemic problem. It's about climate change and biodiversity. It is that. But the question is, what are the vectors for change? And if we're sitting here because we're all business school and business people, if business is a vehicle for that change, then it has to come down to who wins and who loses, right? In business, just by definition. And I think the point is that companies and company leaders can take a more proactive role in banding together to actually help change the rules that pull this ahead more rapidly, but can also embed this more effectively in their own companies. Right, so it comes back to what you were saying earlier. A lot of what goes on, what masquerades as, quote, sustainability, is fluff, right? I mean, you have a silo of people that write reports, and it doesn't really penetrate the business side of the company in any meaningful way. You have some flowery-sounding societal purpose on the website. You have some eco-efficiency programs and sustainability goals, but the business just keeps going the way it always did. It doesn't really have any impact on it. That's crap, right? But increasingly, I think investors can tell the difference between that and a company that has seriously looked. For example, we'll come back, to the Train example. With CSRD, with the Corporate Sustainability Reporting Directive, coming out of Europe, where you're required to report at scope 3 level and double materiality. A lot of companies just hire people to do it, right? It's just sort of like a silo. They hire people to do that report so that they get it off the table and the business just keeps cranking along as it always did. A company like Train wants to internalize that information and make it part of their management information system in the company. That's a completely different attitude, right? I mean, it's like night and day. And it is and will affect their long-term decisions about where they make investments in, what types of products they develop, what markets they choose to try to create and enter. They're two completely different worlds.
And we did some work comparing Train and Carrier who have similar business lines, right?
Yep.
And we wanted to see what's the difference. To your point, it's exactly internalizing it because you can, if you compare a variety of different operational stats about Train and Carrier, you can see the Train is actually delivering. They're effectively running their business better, and Carrier or not. They both have the 1 gigaton, the exact same promises in their sustainability reports. And the Carrier leadership wanted to know, why do investors don't believe us? We've promised the same thing the Train promised. Why do they give them the money?
Maybe
and the
because-
reality was they looked between the lines and they could see who truly meant
And
it.
they copied Train.
They're trying to, but again, investors are not stupid.
Right.
Back to this regulatory question,
Yeah.
I think I have one wrench to throw in the works here,
Okay.
which is Europe, right? So Europe is more regulated. Europe is more stakeholder focused. They're more sustainably focused. Europe from 2010 to 2023, GDP grew at 65% of the U.S. Investment in Europe was 55% of the U.S. So these crazy short-term U.S. CEOs are double investing Europe, and which is why I keep coming back to
And getting
we're
paid
looking
more.
at a what's that?
And getting paid more.
Getting paid without doubt.
Yeah.
But I think we, again, my main theme is I do not think this is endemic of the whole system failing. There's some behavior patterns in here, and I think academia could help. And maybe and you had some examples, maybe they do this, but instead of creating a new market, what about just the research to go look at companies who have tended to be more long-term focused, however you want to define that. How have they done? And I know I'm not solving your sustainability issue, except a real long-term focus does have, you have to think about the planet to be really long-term focused.
Gotcha. So counter argument here. What's wrong with quick wins for short-term, getting the stock to pop? For instance, I mean, it's something we, at Harvard Business Review, we tell somebody starting a new job, first 100 days matters a lot, and you want to get quick wins, and then you're going to be trusted to do more, and you get to stay on as CEO longer. What's wrong with some of that?
Again, I'm going to cut this off, sorry, even though you're the moderator. We're focusing on short-termism. I mean, to me, the question, we're back to this almost locker room talk about how business works, and I totally agree with you about Europe. We need good regulation, not lots of regulation.
Fair enough.
So it's weird. To me, the issue here is is business, I think Stu put it, is business a good vector that can fix the system? Maybe it can fix it by changing this short-termism, like changing their attitudes. Or maybe it can change it by reporting, this kind of thing. Or maybe it can change it by lobbying for government policy. I have to tell you, I want separation of business and state. Because if you think about a kind of rule structure, supposing we said, yes, we want business involved in politics and shaping things and really changing how the rules are set. Well, then we have to allow Peter Thiel and lots of other people to be involved in that process too, and I'm not sure we'd all be for that, Elon Musk. So I want business, I want business separated from government. I want Citizens United gone. I want business is the player. They do as well as they can given the rules. I know I sound like Milton Friedman, but I am saying that. And the rules get set by society, by us, by voters, by activists.
In an ideal world, I think that's it. I'm with you there, but we're so far from that world. And we already have Peter Thiel and Musk, in this in the deepest possible way. So it's right now the people that have a voice are exactly the ones that we're talking. How do we bring the voices of the kind of mid-tier companies that we're talking about? If this is about kind of the loudness of your voice, how do we amplify the voices of the companies that we think are actually doing this for the long term? Right now, that's what the system question is right now. If we could magically wave a wand and get money out of politics, I'd vote for that in a second.
Tony, what are you excited about for the future? What are you hoping to see, I guess, in years to come as the understanding
Again,
of this
think
improves?
It's a great question. I really hope that we keep focusing on there is a way forward. So I want to come back to sustainability, because I don't think this topic was meant to be particularly around sustainability. It's part of it. So I'm clearly focused more on how you run a business and making those short-term decisions. And I think that we need to keep highlighting the successes. I think we will do that. I think this kind of conversation and this institute is a big part of that. And having these conversations is really important. I think on sustainability, and by the way, I'm not a big fan of government in much, but I said this before we got on stage. I do think around sustainability, it has got to be a cooperation between government and business, which is hard to imagine in a constructive way, but I don't see how else it can work. And I think what's good is that a good business knows it has to keep its customer pleased. And I do think you all care about sustainability. And so, yes, it's true, as was said earlier, that you may not pay more for your product because you like sustainability. On balance, consumers don't, but you do care. And so there is a certain pressure there to bring business to the table. And I would love to see good regulation.
Okay. Aneliya?
I agree with everything. It actually sounds like we're in violent agreement. I think that regulation, if it's done right, not too much regulation, is the right path to go. I would add the additional vector of a real conversation or dialogue, let's call it, between shareholders and corporations. I think that that's a very important piece, because it's only then that you can understand where capital is coming from, why, how to deserve it, if you will. And by the way, not to get too technical, but there is an SEC guidance that has now been issued that would stagnate that, because it would make it impossible for investors who are not activists to tell companies, to give them recommendations, to tell them, I'm not going to vote in support of you unless you do X, Y, and Z. Or if they do that, then they are automatically become activists. So I think that is going to cause shareholders to remain very unengaged and silent with corporations. And we're going to have a lot of companies that are caught by huge surprise when they don't get the shareholder vote. So I think that that's another piece where the regulation has to be reciprocating, if you will, or reflective of what makes sense in the capital markets. But I agree that smart regulation, shareholders and corporations talking, is, I think, the important bit.
Alignment, almost, just for shareholders and the corporation. Okay, so we have a number of questions that I'd love to get to from the audience. Andy, just fair warning, they presuppose that short-termism exists. So maybe, use your imagination here. Is short-termism an American problem? Because the U.S. is built on free markets and the idea that competition drives innovation. Does that leave our system more vulnerable to short-termism? Does it exist globally? How local is short-termism of an issue?
Well, I already gave you the Europe example, right? So they're investing less than we are. So that this maybe goes to Andy's point, but I mean, the short-term, long-term decisions we all make every day. So we're treating this like it's some big point. The question is, how do you balance it? And I think, of course, the answer is across the world, everybody faces this all the time. Like I said, I think public markets are pushing it a little harder, and I think that's creating an issue. And to me, it's more of a PR issue. Europe seems not to be under the same stress, higher dividend. There's a little less focus on that stock this quarter, but I think it's a global phenomenon to a certain degree.
Yeah.
I think the same. It's a global phenomenon. It's kind of interesting because the regulations in Europe actually make it harder to run a contest there, for example. So a lot of why we're seeing all of these activist behavior here is driven by regulation. Nonetheless, it happens globally. So law does not isolate you, if you will, from some of these pressures.
We have another question. Interesting case here, right? If smaller shareholders, not necessarily activists, but let's call them active investors, want to give up some profit to solve an environmental or social problem, does public company governance allow a manager to actually see that and act on that preference?
The only way I can think of, I mean, obviously there are ways you can raise money like bonds that are sustainable based bonds. So companies can avail themselves of that. That's a slightly different answer. Beyond that, you really have to go to a fund manager or somebody and invest with them who are sustainable focused. And one person's opinion is, I don't think anybody out there knows what sustainable means. So unfortunately, I don't think you're getting the results you think you are. You won't be buying oil. I mean, you know that much. But what is sustainable? What isn't? I mean, I'm in packaging. We make a lot of stuff that goes into landfills. Sorry, we try really hard to do the right answers on that, and I don't know what sustainable means from one day to the next, right? Because something might be less waste consumed in a stream than something else, but you're measured more on how much carbon did you take out as opposed to what is the fundamental point of your product. So there's a lot of confusion there. But the only answer I know here is you'd have to go to a sustainable investor.
Okay.
And small shareholders do have the ability to submit shareholder proposals, right? So you can be even a nonprofit organization or a tiny shareholder, and you can still put your agenda item on the company's proxy. And yes, a CEO would know that that is what you're fighting for, and a CEO can take that into consideration and do it or not do it.
Okay, we've briefly discussed private equity. In the world of clean tech, there's been this discussion of the missing middle, lack of funding for climate projects. How can we increase the amount of long-term investments when there's only a few players and they maybe have a different time horizon?
This may be an area where we have too much regulation. In the one of the big problems in tech, and certainly in the energy sector, is it's very hard to roll out the first real example. It's very, very expensive, and there can be a lot of regulatory, kind of governance risk, and it's why a lot of stuff has gone to other countries, particularly China. So the question was, what can we do about that? I mean, that may be an area where we need less regulation.
I'm in.
One thing that is being tried but it really hasn't scaled up is these notions of blended finance, where you can have different risk appetites and you can have potentially for-profit and nonprofit investors, ones who are philanthropic and ones that are seeking returns, and you can have, if you will, a different stack. It has not worked very well. I think it's intending to bridge this gap, but it's not worked very well, mostly because there's confusion from the people who are putting money into these as to, if I'm doing this out of philanthropy and you're generating return, why am I also not making money? So it's kind of like a difficult construct to pitch to different pools of capital, but it is one possible solution that is being explored.
I love these questions, by the way. Do you think a reduction in reporting, I mean, we've talked about timeframes, right? And what is short term, but there is a difference when you're managing as a private equity firm versus a public company. Do you think a reduction in public company reporting frequency would be beneficial for the market overall in terms of both addressing short-termism and ensuring financial stability and prosperity?
I would say yes. I think Europe's got this right, that the semi-annual is probably better. I don't think it magically gets rid of this problem, but I think it does tell CEOs that it is a little bit more of a long-term effort you're under.
I would agree. One thing that we have been pushing for very hard is integration of financial and non-financial information. When corporates are reporting, I think that as long as you have the same quality of information and you can integrate structural sustainability issues with your immediate business results or long-term business results, and you can explain to the market why is it that some activity you're going to do today will lead to long-term value. It doesn't matter that it's frequently done. It just needs to not come at the expense of the quality or importance of information. The material stuff should still be out there and somehow relayed to the market.
What I want to hear on this time frame from both of you. Just
It's
even
interesting
whether you're for
that,
it.
sustainability reporting kind of since its early days, which was, voluntary and now gradually becoming mandatory, was always, for whatever reason, sort of seen as an annual cycle thing, which is kind of interesting, just to realize that that's the case, that you have like an annual sustainability report that the company issues. Now, often, as we've already said, those sustainability reports are often like kind of high gloss, eyewash, and don't really tell you anything about what the business is really doing. They're more PR documents. But the fact that there is sort of a built-in expectation that, quote, sustainability is more long-term, reported out on a long-term basis, whereas you don't really talk about that stuff in the quarterly, in the quarterly advisory, is insane, right? I mean, so somewhere there needs to be a meeting of the minds between those two things, so that there's an appropriate cycle of making information available to the world that, as you say, integrates those two things together in a meaningful way.
And I think that there is a shift actually, but the sustainability reports are not verified by accountants.
Yeah.
And that's why, they're not actually made with the periodic filings. They're just out there. That's how you have a lot of greenwashing be born. I think that there is a kind of a semi-revolution against this.
Yeah.
This like siloed, somebody in the back office, with the red stapler is creating the sustainability report. And meanwhile, the CEO is doing something else.
Taking the helicopter to work.
Taking the helicopter to work, like I'm sure Tony did. But one of the things that there is a big pushback against, if you will, is this notion that that you would separately report sustainability and separately report the report, and you're not going to tie everything together. And for those who are able to substantiate it, the investors are rewarding them. Linda is one example that is quite interesting. They do not make ambitious targets. They're not saying we're going to solve all the world's problems, but they're saying we're going to make ourselves better, recognizing that we are currently not a very good player, and this is precisely where we're going to take it from. This is the exact number. This is where it's going to go. This is how it's going to work out. And that's an effort that's led by the CFO of Linde, not by a sustainability officer, which, by the way, is another big issue. Where in the organization is this reporting? And is it being answered? The question, is it being answered by the business leaders, if you will, rather than some
Yeah.
The
preparer of a
key
sustainability
distinction
report?
here, to your point, is, and I try to talk about this in my book a bit, the distinction between foundational or functional sustainability goals, which are usually kind of scope 1 and 2-ish, and they can be assigned to functional leaders, things like operations, emission, waste and, water use and energy use, or, even like back when DEI was, that's an HR thing, maybe R&D can be held accountable for making some investments in this new technology. Procurement can worry about kind of supply. So these are all sort of functional, foundational sustainability goals, but they don't really have anything to do with the business, right? That the only time that sustainability really becomes relevant that way is if the commercial side of the company is involved in it, right? Then they become sustainability related or driven business aspirations, not just functional foundational goals.
Andy, what's your opinion on changing the timing frequency of reporting requirements? Do you have
I have
a strong
no
opinion?
idea. I have no opinion.
Yeah. You'd want it to be research-based, evidence-based change or something? Okay. All right. We have one final question, which I also love. It seems as though this entire panel is in agreement on the direction to move business in. If the answer is relatively clear, why have we failed to achieve this ideal state?
Can you repeat the question? If
If
the answer
is clear where business should go or how the system should change, why haven't we gotten there yet?
We don't talk about it a lot. You've got a lot of pressures that, I mean, we can't pretend the pressures don't exist. You do have activists. You do, and by the way, I'm coming there first, not because it's the biggest problem. You've got analysts who put quarterly earnings out, so they push stuff. You've got a bunch of shareholders with different motivations. You've got incentive plans that are highly equity based, right? And even though a lot of them now have long-term components to them, it's 3 to 5 years, and it's on equity. And so, I think there's a lot to be talked about here. If you're saying, I think it's a misbehavior, and I do think it's a misbehavior, there are things that can be done to enhance it. None of them alone is going to make this go away.
It is systemic in that sense, right? It is institutional because it's the analysts, right? It's the consultants, right, who are mostly MBAs, right? That where the core message often is value capture, right? They may have a sustainability practice, but that's about reporting, right? The business practices are focused on value capture. And that all of these things sort of rotate around that same kind of little troika that I showed in the diagram, right? They support and enable it. So in that sense, it's cultural, it's cognitive, and it's institutional.
Learned
It's
behavior.
hard to change.
Yeah.
It's a belief system.
I agree with everything. I would only add that there needs to be more involvement by the various, or more coordination between the various players, if you will, or segments, government, shareholders, corporations. Like, it has to go around, I think, better. And at the root of it, there needs to be better information. Some of these larger problems are still vague. It's unclear who owns what, where, how, and who should be solving it, if you will.
Andy?
Well, I think the reason it hasn't happened is, building governance systems are hard, and they then need to be changed because situations change. And so it's not really surprising to me that we're always in an imperfect place. But I want to answer a different question, because earlier you asked, what are we hopeful for? And weirdly, in this time where our institutions are under attack, I think it is an opportunity for us to understand the importance of those institutions and to fight for them and to pay attention to them in a way we really haven't. So I think we've become complacent. We've become complacent about, what scholarship is in universities and our systems for that. And we become complacent at our local governments, and we become complacent in our citizenship, and we become complacent at the national level. And what we all need to do now, is to go out and strengthen the institutions we're part of. So if we're part of a university, strengthen it. And if we're in a local government activity, strengthen that. Because that is what's going to pull us through, and that's also going to speed any of this adjustment we need to make to solve short-termism or these broader sustainability issues.
I love that answer. I think he's right on it. Rather than tearing all these institutions down, let's support them for what they do well, highlight what's good, and tweak them.
Be citizens and not just consumers.
Works.
Can you all join me in giving this great group a big hand?
Thank you.